Do you dream of a life of true freedom, a life where your money works tirelessly for you instead of you constantly working for it? This isn't some far-fetched fantasy, my friend. It's a tangible reality for countless individuals who have discovered and harnessed the incredible power hidden within the stock market. Stocks are not just pieces of paper, they are your vehicle. They are your pathway to building substantial, lasting wealth. They offer you the chance to transform your hard-earned income into a dynamic, growing asset. An asset that can fuel your deepest desires, secure a comfortable and dignified retirement, and provide a legacy of abundance for your loved ones. The journey might appear complex from the outside, but the potential rewards are truly life-changing. It's about seizing control. It's about designing your financial destiny, one intelligent investment decision at a time. Are you ready? Think, really think about what genuine wealth signifies for you. Is it the peace of mind that comes with a stress-free retirement? Perhaps it's the exhilarating freedom to explore every corner of this magnificent planet. Or maybe it's the profound satisfaction of creating a lasting legacy for your children and future generations. The stock market, when approached with clarity, knowledge, and unwavering discipline, can be the powerful engine that propels you towards these magnificent goals. It's so much more than just fluctuating numbers on a computer screen. It represents a dynamic mechanism for you to actively participate in the growth and success of pioneering companies. You become an owner, a stakeholder, sharing directly in their triumphs, their profits, and their global expansion. This isn't a gamble. This is strategic ownership. This is your opportunity. Many people mistakenly believe that the riches of the stock market are exclusively reserved for the already affluent or for Wall Street wizards with secretive knowledge. Let me tell you right now, that is a limiting belief, a myth that holds people back. The empowering truth is that the stock market is and always has been accessible to everyone. Yes, that includes you. With the right mindset, a hunger to learn, and a commitment to consistent action, anyone can participate and build remarkable wealth. It's about understanding core, fundamental principles that have stood the test of time, and applying them with unwavering consistency. This essay is designed to be your guide, your roadmap. It will illuminate step by step the path to unlocking your very own stock market riches. Prepare yourself to discover the secrets that have the power to fundamentally transform your financial future. The incredible power to reshape your financial life is not outside of you. It is within your grasp right now. History unequivocally shows that the stock market has been one of the most potent and effective tools for wealth creation over the long term. It consistently outpaces the eroding effects of inflation and offers the potential for returns that can dramatically grow your capital beyond what you might currently imagine. Do not let fear, doubt, or a perceived lack of knowledge paralyze you and keep you on the sidelines. Instead, embrace this moment as an opportunity to learn, to expand your understanding, to grow as an individual, and to actively build the financial future that you not only desire but truly deserve. Your journey to complete financial empowerment begins today, with the conscious decision to understand and engage with the dynamic world of stocks. So let's demystify this whole concept. What exactly is a stock? Imagine a thriving, innovative company. Think of giants like Apple or disruptive forces like Tesla as a massive, delicious pie. When you purchase a stock, which is also commonly referred to as a share or equity, you are essentially acquiring a small, tangible slice of that very pie. You instantly become a part owner, a shareholder in that specific enterprise. This ownership stake grants you a legitimate claim on the company's assets and, crucially, a share in its profits, especially if those profits are distributed to shareholders in the form of dividends. It's a direct, powerful way for you to align yourself with and participate in the ongoing success of businesses you genuinely believe in. Grasping this fundamental idea is the crucial first step to dissolving any confusion surrounding the market. Now, why does the value of these slices, these stocks, tend to grow over extended periods? The increase in value is intrinsically linked to the company's operational performance and its perceived future prospects. As a company successfully innovates, launches new products, expands its market reach, increases its sales, and most importantly, generates greater profits, its overall intrinsic value typically increases. Consequently, the demand for its stock among investors rises, and this increased demand naturally pushes its price upwards. Investors become willing to pay a premium for a share in a company that demonstrates consistent growth, strong profitability, and a bright future. While external economic factors, prevailing industry trends, and overall investor sentiment do exert influence, the fundamental driver of stock value remains a company's tangible success and its untapped potential. Think of it in this empowering way. You are investing in the boundless potential of human ingenuity, creativity, and progress. When you decide to buy shares in a well-managed, forward-thinking company that possesses a strong, desirable product or service, you are essentially placing a confident bet on its enduring ability to continue to succeed, to innovate, and to grow. Over many decades, truly successful companies have consistently generated enormous, life-changing value for their loyal shareholders. This is not some get-rich-quick fantasy. It is about strategically aligning your financial interests with businesses that are creating real, tangible value in the world we live in. This sustained, long-term growth is the solid bedrock upon which lasting wealth is meticulously built through stock market investing. Furthermore, it's important to understand that companies have choices regarding their profits. They might opt to reinvest those hard-earned profits back into the business to fuel further growth. Perhaps by funding research and development for new groundbreaking products, by strategically expanding into new geographic markets, or by acquiring smaller, complementary companies. This intelligent reinvestment can and often does lead to even greater future profits and, as a result, a significantly higher stock price down the line. Alternatively, some well-established companies choose to distribute a portion of their profits directly to their shareholders in the form of regular cash payments known as dividends. These consistent income payments can be an incredibly valuable bonus, adding another layer to your overall investment return. So, stocks offer not just growth potential but, in many cases, a stream of passive income too. It's said that the legendary Albert Einstein called compound interest the eighth wonder of the world. He famously stated, "He who understands it, earns it, he who doesn't, pays it." This profound principle, my friend, is the undisputed secret sauce, the turbocharger of wealth building, especially within the stock market. Compounding, in its essence, is the process of earning returns not just on your initial investment capital, but also on the accumulated returns that your investment has already generated. Picture it like a small snowball rolling down a long snow-covered hill. As it rolls, it gathers more snow, growing bigger and bigger, and moving faster and faster. Your money starts working for you, and then magically the money that your money earns also starts working for you, creating a powerful exponential growth curve. The true, unadulterated magic of compounding is primarily unleashed and amplified by one critical factor: time. The earlier you begin your investing journey, the more profoundly powerful the effects of compounding will be. Even seemingly small, consistent investments, when made regularly over several decades, can blossom into truly substantial sums of money. Imagine two individuals. Sarah starts investing just $200 every month at the age of 25. Her friend Mark waits until he's 35, but decides to invest $400 per month, double Sarah's amount. Assuming they both achieve a similar average annual return, Sarah, the one who started earlier, even with smaller initial contributions, will very likely find herself with significantly more wealth accumulated by the time they both reach retirement age. Time is, without a doubt, your single greatest ally in the stock market. Let's illuminate this with a clear, simple example. Suppose you invest $1,000 and it achieves a 10% return in its first year. You'll now have $1,100. Fantastic. Now, in the second year, if that $1,100 earns another 10% return, you're now earning 10% on the entire $1,100, not just on your original $1,000. So, you earn $110 in that second year, bringing your new total to $1,210. This incremental growth might seem modest at first glance, but when this process is repeated over 20, 30, or even 40 years, the cumulative effect becomes absolutely monumental. This exponential growth trajectory is precisely why unwavering patience and a dedicated long-term perspective are absolutely crucial for achieving success in the stock market. Never, ever underestimate the incredible power of small, consistent gains relentlessly accumulating over many years. To genuinely and fully harness the awesome power of compounding, make it a priority to reinvest any dividends you receive. Instead of taking the cash payout from dividends, use that money to purchase additional shares of the stock or the fund that generated them. This strategic move accelerates the compounding process even further, putting more of your money to work faster. Starting your investment journey early, even if it's with very modest amounts, is far more impactful in the long run than waiting until you feel you have a large lump sum to invest. The undeniable key is to get your money actively working for you as soon as humanly possible, and then allow the magnificent power of compounding to weave its financial magic over the unfolding years. This is precisely how ordinary people, just like you, build extraordinary, life-altering wealth. Choosing individual stocks to invest in can sometimes feel like you're searching for that elusive needle in a vast haystack, but rest assured, there are guiding principles to light your way. A wise approach is to focus on companies whose businesses you genuinely understand, enterprises whose products or services you personally use, appreciate, and perhaps even admire intensely. Look for companies that possess a strong, durable competitive advantage, often referred to by investment gurus like Warren Buffett as an economic moat. This moat acts as a protective barrier, shielding them from the relentless onslaught of competitors. It could manifest as a globally recognized powerful brand, proprietary unique technology, or a dominant, unassailable market share. Critically investigate their financial health. Are they consistently profitable? Do they carry manageable levels of debt? Are their revenues and earnings demonstrating a pattern of steady, reliable growth over time? Resist the powerful temptation to blindly follow the speculative hype or chase after so-called hot tips from unreliable sources. True financial success demands that you do your own thorough research and due diligence. Take the time to read company annual reports, meticulously analyze their financial statements, like the balance sheet, income statement, and cash flow statement, and strive to deeply understand their core business model and the dynamics of the industry in which they operate. Look for evidence of strong, visionary leadership and a clear, compelling strategy for future growth and innovation. Ask yourself this critical question. Is this a company that I would be genuinely comfortable owning a piece of for the next 5, 10, or even 20 years? Investing in high-quality businesses with solid, proven fundamentals is an infinitely more reliable path to wealth than speculating wildly on unproven speculative ventures. Remember always, you are buying a part of a business, not just a lottery ticket. However, it's crucial to acknowledge that even the most outstanding, seemingly invincible companies can encounter unexpected challenges or face unforeseen headwinds. That is precisely where the indispensable strategy of diversification comes into play. The age-old wisdom says it best: don't put all your eggs in one basket. Diversification simply means spreading your investment capital across a variety of different companies, diverse industries, and sometimes even different asset classes, like bonds or real estate in addition to stocks. The beauty of this approach is that if one particular investment performs poorly for a period, other investments in your portfolio may perform well, thereby smoothing out your overall returns, and most importantly, significantly reducing your overall risk exposure. For beginners, an incredibly simple and effective way to achieve instant diversification is through exchange-traded funds or mutual funds that hold a broad basket of many different stocks, such as an S&P 500 index fund which tracks the 500 largest U.S. companies. Proper, thoughtful diversification ensures that your hard-earned financial well-being isn't dangerously tethered to the unpredictable fate of a single company or a narrow sector of the economy. Imagine for a moment investing all your savings into a single promising tech stock, only to see that entire technology sector face an unexpected downturn due to regulatory changes or new competition. Diversification is your shield against such specific risks. You can diversify your holdings across various industries such as technology, healthcare, consumer staples, financials, energy, across different company sizes, large capitalization, mid-capitalization, small capitalization stocks, and even across different geographic regions like investing in U.S. stocks, international developed market stocks, and emerging market stocks. This carefully balanced and strategic approach is an undeniable cornerstone of prudent, intelligent investing and the sustainable long-term building of wealth. The stock market, you see, is not merely a logical game of numbers, charts, and meticulous financial analysis. It is also a profound and often challenging test of your own emotions. Two immensely powerful human emotions, fear and greed, can, if left unchecked, completely derail even the most carefully constructed and well-intentioned investment plans. When the markets are surging upwards and everyone seems to be making money, the intense fear of missing out, FOMO, can easily lead to reckless, impulsive buying at dangerously inflated prices. Conversely, when markets take a sharp downturn and prices are falling, raw fear can trigger debilitating panic selling, which unfortunately locks in losses and prevents participation in the eventual recovery. Therefore, mastering your emotions, developing an iron will, is absolutely paramount to becoming a truly successful long-term investor. You must diligently cultivate unwavering patience and unshakable discipline. Patience is that invaluable virtue of calmly waiting for your investments to mature and grow, fully understanding and internalizing that building significant wealth is a marathon, not a frantic sprint. The stock market will inevitably have its exhilarating ups and its stomach-churning downs. These fluctuations are a normal, expected part of the investment landscape. Short-term market movements are often just noise, distractions from the bigger picture. Your primary focus must remain steadfastly on the long-term underlying trend of growth. Discipline, on the other hand, means rigorously sticking to your predetermined investment strategy, and especially when doing so feels uncomfortable or counterintuitive. It means continuing to invest regularly and systematically through market highs and lows, a powerful strategy known as dollar-cost averaging, and consistently resisting the powerful urge to constantly tinker with your portfolio based on daily news headlines or fleeting market sentiment. You must train yourself to avoid making critical investment decisions based purely on emotional reactions to breaking market news or the short-term performance of your portfolio. The financial media, often driven by the need for ratings and clicks, frequently thrives on sensationalism, amplifying feelings of fear during market downturns and promoting irrational euphoria during market upswings. Your best defense against this emotional roller coaster is to develop a sound, logical investment plan based on your specific financial goals, your personal tolerance for risk, and your available time horizon. Once you have this plan, stick to it with conviction. If you find yourself feeling overly anxious or stressed about market movements, it might be a clear signal to revisit your plan and ensure it genuinely aligns with your comfort level, or perhaps it's simply a reminder to step away from obsessively watching the market too closely. One of the greatest investors of all time, Warren Buffett, famously and wisely advised, "Be fearful when others are greedy and greedy only when others are fearful." This single sentence perfectly encapsulates the powerful contrarian mindset that so often leads to exceptional investment success. It means having the courage to buy quality assets when their prices are depressed and general market sentiment is poor, that is, when most others are gripped by fear, and conversely exercising caution and perhaps even selling when prices are excessively high and everyone around you is euphoric and overly optimistic, that is, when others are driven by greed. This approach requires immense emotional control, deep conviction in your long-term strategy, and the ability to think independently. Cultivate this emotional fortitude, this mental toughness. It will undoubtedly become your most valuable asset in the world of investing. The rewarding path to achieving stock market riches is, unfortunately, paved with several potential pitfalls that can ensnare unwary investors. One of the most common, and arguably most damaging mistakes, is engaging in panic selling. When the market experiences a significant downturn or a correction, it is an entirely natural human response to feel a surge of fear and anxiety. However, impulsively selling your investments during such a panic often means converting temporary paper losses into permanent real losses, and critically, it means missing out on the market's eventual and historically consistent recovery. History teaches us that markets have always recovered from downturns, however severe, and have invariably gone on to reach new, higher highs. Always remember your long-term financial goals, and steadfastly resist the powerful urge to react impulsively to short-term market volatility. Another frequent error that trips up many aspiring investors is the dangerous practice of chasing hype and blindly following tips for hot stocks. You will undoubtedly hear anecdotal stories, often amplified by social media or sensationalist news, of individuals supposedly making quick, effortless fortunes on a particular stock that has captured the public's imagination. While the allure of fast profits is undeniably tempting, investing based primarily on hype and speculation rather than on solid, diligent research and fundamental analysis is akin to gambling your hard-earned money away. These hyped-up stocks often experience meteoric, unsustainable rises in price, only to be followed by equally dramatic and painful crashes, leaving those who jumped in late with significant, often devastating losses. Stick to proven, time-tested strategies and invest in high-quality companies or broadly diversified funds for sustainable long-term growth. Trying to consistently time the market is, for the vast majority of investors, a fool's errand that rarely ends well. This misguided strategy involves attempting to accurately predict the market's precise peaks and troughs, with the aim of selling just before a significant downturn and buying back in just before a major upturn. The truth is, even seasoned financial professionals with vast resources struggle to do this successfully and consistently over time. More often than not, attempts to time the market result in missed opportunities during upward trends or, even worse, buying high and selling low, the exact opposite of what you want to achieve. A far more effective and less stressful approach is to focus on time in the market, which means consistently investing over the long term, systematically, regardless of the day-to-day or month-to-month market movements. Neglecting the crucial principle of diversification is another critical mistake that can severely undermine your investment success. As we've emphasized earlier, concentrating all your investment capital into a single stock or even a very narrow sector of the economy exposes your portfolio to an unnecessary and potentially catastrophic level of risk. If that one specific investment falters badly, your entire portfolio, and thus your financial future, suffers a significant blow. Similarly, failing to periodically rebalance your portfolio can lead to it becoming inadvertently and overly concentrated in certain assets that have performed exceptionally well in the recent past, thereby quietly increasing your overall risk profile without you even realizing it. Regularly reviewing and strategically adjusting your asset allocation helps to maintain your desired level of diversification and keeps your portfolio aligned with your long-term goals. The inspiring stories of ordinary individuals who manage to build extraordinary life-changing wealth through the stock market are not just a collection of feel-good fairy tales. They stand as powerful testaments to the undeniable efficacy of patient, disciplined, long-term investing. Consider the legendary Warren Buffett, widely regarded as one of the most successful and respected investors in all of history. He began his investing journey as a young child, purchasing his very first stock at the tender age of 11. His enduring investment philosophy powerfully emphasizes long-term value investing, the strategy of buying shares in fundamentally strong, well-managed companies when they are available at reasonable prices, and then holding on to those shares for many decades. His remarkable journey from a modest middle-class background to becoming a multi-billionaire philanthropist magnificently showcases the profound, almost magical potential of compounding and intelligent stock selection. Then there is the truly remarkable and often cited story of Ann Scheiber, a famously frugal IRS auditor who retired from her government job in 1944 with personal savings amounting to approximately $5,000. It's a modest sum by today's standards. However, by the time she passed away in 1995 at the ripe age of 101, her meticulously managed stock portfolio had grown to be worth an absolutely astonishing $22 million. How did she achieve this incredible feat? She lived a very modest lifestyle, diligently and consistently reinvested all her dividends, and steadfastly held onto her shares of high-quality blue-chip stocks for the long haul through thick and thin. Her story is an incredibly powerful example proving that you don't need a stratospheric income or an Ivy League finance degree to achieve complete financial independence through the stock market. Unwavering discipline and a committed long-term perspective are the true keys to unlocking such success. Let's also consider Ronald Reed, a hardworking janitor and gas station attendant from rural Vermont, who, unbeknownst to almost everyone who knew him, secretly and patiently amassed an $8 million fortune by the time he passed away in 2014. He lived an exceptionally simple and unpretentious life, diligently saved every spare dollar he could, and consistently invested his savings in dividend-paying stocks of well-known, established American companies. He held onto his shares for many, many years, allowing the incredible power of compounding to work its quiet magic over decades. His story understandably shocked his small community, but continues to serve as an incredible source of inspiration for millions, proving beyond any doubt that consistent saving habits combined with patient, long-term investing in quality stocks can lead to truly remarkable wealth accumulation, regardless of your profession or your starting point in life. These inspiring individuals and countless others like them didn't rely on overly complex trading strategies. risky speculative ventures, or privileged inside information. They simply understood and diligently applied the fundamental principles of sound investing. Invest in good, solid businesses you understand, diversify your holdings to manage risk, consistently reinvest your earnings and dividends to fuel further growth, and crucially, stay the course with unwavering resolve through all market ups and downs. Their astounding triumphs powerfully underscore the genuine accessibility of stock market wealth to ordinary people, people just like you, who are willing to take the time to learn, cultivate patience, and remain disciplined in their approach. Their legacies stand as living proof that the dream of financial freedom, fueled by the powerful engine of the stock market, is alive and well for all those who dare to participate. Are you feeling that surge of inspiration? Are you ready, truly ready, to take decisive action towards building your own financial fortress? The fantastic news is that getting started in the stock market today is far easier and more accessible than ever before in history. The very first, non-negotiable step is to commit yourself to education. Read insightful books on investing, consume quality articles from reputable financial publications, and explore trustworthy financial websites. Make it your mission to thoroughly understand the basic yet powerful concepts we've discussed throughout this guide: what stocks truly represent, the almost magical power of compounding returns, the critical importance of smart diversification, and the absolute necessity of adopting a patient, long-term perspective. Remember, knowledge is your best defense against common investing mistakes and your most potent tool for building lasting wealth. Do not rush this foundational step. A solid understanding is absolutely crucial for your success. Next, you need to clearly define your personal financial goals and honestly assess your individual risk tolerance. What specific objectives are you investing for? Is it a comfortable and secure retirement in the distant future? Perhaps a down payment on your dream house in a few years? Or maybe funding your children's higher education? Simultaneously, you must determine how much risk you are genuinely comfortable taking with your hard-earned money. Your candid answers to these vital questions will directly shape your investment strategy, including the types of investments you choose. Then the practical step: you'll need to open an investment account, often called a brokerage account. Today, numerous online brokerage firms offer commission-free trading on many investments and remarkably low or even no account minimums, making it incredibly accessible for virtually everyone to start their investing journey. Diligently research different brokers to find one that perfectly suits your specific needs in terms of fees, available investment options, user-friendliness, and educational resources. Once your brokerage account is officially open and funded, you can begin the exciting process of actually investing. For beginners, an absolutely great and highly recommended way to start is by investing in low-cost index funds or exchange-traded funds or ETFs that are designed to track a broad market index, such as the widely followed S&P 500. This approach provides you with instant diversification across hundreds of different companies with a single purchase, significantly reducing your risk. And here's more good news: you don't need a large sum of money to begin your journey. Many modern brokers now allow you to buy fractional shares, which means you can invest with as little as $5 or $10 in some of the largest and most successful companies in the world. The absolute key is to simply start and then to make investing a regular ingrained habit, even if it's only a small, manageable amount each month. Finally, seriously consider automating your investments to build consistency and discipline effortlessly. Most brokerage platforms allow you to set up regular automatic transfers from your bank account directly to your brokerage account. You can then often arrange for that money to be automatically invested in your chosen funds or stocks on a recurring schedule like weekly, bi-weekly, or monthly. This pay-yourself-first approach not only instills crucial financial discipline but also takes much of the emotion out of the investing process, as you're not constantly making active decisions based on market fluctuations. Furthermore, this systematic approach allows you to benefit from a powerful technique called dollar-cost averaging, which means you naturally buy more shares when prices are low and fewer shares when prices are high, potentially lowering your average cost per share over time. Remember, unwavering consistency is the master key. Your journey to unlocking stock market riches begins with these simple, practical, and actionable steps. You are now equipped with the essential foundational knowledge required to unlock the formidable door leading to stock market riches. We have journeyed together, exploring what stocks truly are, uncovering the almost unbelievable power of compounding growth, internalizing the profound wisdom of diversification, and understanding the critical importance of maintaining emotional discipline in the face of market volatility. You have seen, through real-life examples, that the common pitfalls of investing can indeed be skillfully avoided with heightened awareness and a commitment to sound principles. And most importantly, you've learned that real people, hailing from all walks of life, have successfully built substantial, life-altering wealth through patient, consistent, long-term investing. The path forward is clearer now, the necessary tools are readily available to you. The pivotal question that remains is this: what will you choose to do with this empowering knowledge? The transformative journey to achieving genuine financial freedom is not some exclusive privilege reserved for a select, fortunate few. It is in truth available to absolutely anyone who is willing to dedicate themselves to learning, to commit to a plan, and to take consistent, unwavering action. Do not allow fear, self-doubt, or any perceived complexity to hold you back from seizing this incredible opportunity. Start small if you must, but the most important thing is to start now, today. Every single dollar you invest today is like planting a precious seed for your future financial well-being and security. Embrace the ongoing learning process with enthusiasm, stay rigorously disciplined in your investment approach, and cultivate the virtue of patience as you watch your investments steadily grow and compound over time. The stock market is an undeniably powerful engine for wealth creation, and you, my friend, now hold the keys to start that engine. Take a moment to vividly imagine the incredible future you can actively create for yourself. A future characterized by greater financial security, more abundant choices, and the unparalleled ability to live life fully on your own terms, not dictated by financial constraints. This is not merely a distant dream, it is an entirely achievable reality waiting for you to claim it. The positive financial habits you begin to build today, the discipline of saving regularly, the wisdom of investing intelligently, and the fortitude to stay the course through all market conditions will compound powerfully over the coming years, leading to results that might seem almost unimaginable from your current vantage point. The ultimate power to fundamentally transform your financial destiny lies not in some elusive secret formula, but rather in your own consistent effort, your unwavering belief in your own capabilities, and your commitment to succeed. So I urge you, take that crucial first step. Do it today. Open that investment account. Make your very first investment, no matter how small it may seem initially. Commit yourself wholeheartedly to the lifelong journey of learning and growing as an intelligent investor. Remember the ancient wisdom: the journey of 1,000 miles always begins with a single decisive step, and your personal journey to a richer, more fulfilling future begins with the courageous decision to act today, right now. You possess the inherent power within you to build lasting wealth, to secure your financial independence, and to create a meaningful legacy for generations to come. Go forth and claim your magnificent future. The stock market is ready and waiting to reward your diligence, your vision, and your courage. The time is now. Thanks for watching. Like and subscribe if you found this video useful.